Now speaking, Pony Ma, Chairman and Chief Executive Officer. During Q2 2023, we experienced solid revenue growth and focused on higher quality revenue streams with better margins. Our profit growth exceeded revenue growth due to careful cost discipline. Advertising revenue saw rapid growth, thanks to the implementation of machine learning on our platform and video accounts monetization. Now, let's dive into the financial numbers. Total revenue was 149 billion Chinese yuan, up 11% year-over-year or down 1% quarter-over-quarter. Gross profit was 71 billion Chinese yuan, up 22% year and 4% quarter-over-quarter. Non-IFRS operating profit was 50 billion Chinese yuan, up 37% year-over-year and 4% quarter-over-quarter. Non-IFRS net profit attributable to equity holders was 38 billion Chinese yuan, up 33% year-over-year and 15% quarter-over-quarter. Moving on to our key services, our combined MAU of Wixin and WeChat grew to 1.3 billion, with increased synergies among video accounts, mini programs, and moments. In the gaming sector, we launched 2 high-quality PC games in China, marking our most significant PC game launch since 2015. In Generative AI, we are internally testing our own proprietary foundation model and offering Tencent Cloud Model as a service solution for efficient deployment of open-source foundation models across various industries. I will now pass the floor to Martin and James for a business review. Now speaking, Martin Lau, President. In the second quarter of 2023, our total revenue increased by 11% year-on-year. Social networks revenue was up 2% year-on-year, driven by increased revenue from mini games and music subscriptions. Long-form video subscription revenue decreased by 2% year-on-year. Music subscription revenue increased by 37% year-on-year, reaching a record high of 100 million subscriptions in June. Domestic games revenue remained stable at 32 billion Chinese yuan, while international games revenue increased by 19% year-on-year. Communications and social networks saw healthy growth in user engagement, with total time spent almost doubling year-on-year. We are strengthening our content ecosystem and expanding monetization opportunities within video accounts. Advertising and live streaming e-commerce are showing promising growth potential. Mini programs are serving over 1.1 billion users monthly, with significant engagement growth. Mini games have become a successful vertical use case, engaging over 400 million monthly active users and generating substantial revenue for developers. Mini games also provide strategic value for Tencent by expanding our audience base and generating high-margin revenues. Now speaking, James Mitchell, Chief Strategy Officer. In the second quarter, our domestic game revenue is expected to resume year-on-year growth in the third quarter. Our new game launches, such as Fight of the Golden Spatula, Arena Breakout, and Wild Rift, have been successful and ranked among the top 10 mobile games in China. We focus on cultivating evergreen successes with high user engagement. Naruto Mobile and Dungeon & Fighter continue to perform well, achieving all-time highs in gross receipts and average daily active users. We have recently launched 2 big PC games in China, Valorant and Lost Ark, which are expected to contribute to revenue in the third quarter. Valorant is our most successful PC game release ever in China, and Lost Ark has become the most popular MMO game on live streaming platforms. In international games, Valorant and PUBG Mobile have shown year-on-year growth in daily active users and gross receipts. Our online advertising revenue grew 34% year-on-year, outpacing the industry, thanks to enhancements to our ad platform and robust demand for video accounts ad. Fintech and business services revenue increased by 15% year-on-year, driven by growth in commercial payments and wealth management. We have completed self-inspection and compliance upgrades for our payment business. Business services revenue also grew, driven by video accounts, live streaming commerce, and cloud services. We launched Model as a Service solutions in our cloud services, enabling enterprises to develop customized large models more efficiently and cost-effectively. Now speaking, John Lo, Chief Financial Officer. Hello everyone. In the second quarter of 2023, our total revenue was 149.2 billion renminbi, up 11% year-on-year. Our gross profit was 70.8 billion renminbi, up 22% year-on-year. Operating profit increased by 34% year-on-year to 40.3 billion renminbi. Our net profit attributable to equity holders was 26.2 billion renminbi, up 41% year-on-year. Diluted EPS also increased by 41% year-on-year to 2.695 renminbi. Now, let's talk about our non-IFRS financial figures. Our operating profit was 50.1 billion renminbi, up 37% year-on-year. Net profit attributable to equity holders increased by 33% year-on-year to 37.5 billion renminbi. Diluted EPS also rose by 34% year-on-year to 3.875 renminbi. Moving on to gross margins, our overall gross margin was 47.5%, up 4.3 percentage points year-on-year. Gross margin for VAS was 54%, up 3.4 percentage points year-on-year. Gross margin for online advertising was 48.9%, up 8.3 percentage points year-on-year. Gross margin for fintech and business services was 38.4%, up 5.1 percentage points year-on-year. In terms of operating expenses, selling and marketing expenses were 8.3 billion renminbi, up 5% year-on-year. R&D expenses were 16 billion renminbi, up 7% year-on-year. G&A expenses, excluding R&D, were 9.4 billion renminbi, down 16% year-on-year. Our non-IFRS operating margin was 33.6%, up 6.2 percentage points year-on-year. Non-IFRS net margin was 25.9%, up 4.3 percentage points year-on-year. In terms of cash flow and balance sheet metrics, our total capex was 4 billion renminbi, up 31% year-on-year. Free cash flow for the quarter was 29.9 billion renminbi, up 34% year-on-year. Our net cash position was 17.7 billion renminbi. Goldman Sachs analyst Ronald Kung inquired, "Can you provide an assessment of the second half outlook for advertising growth, considering the strong performance in the second quarter, particularly in video accounts and the positive impact of algorithm upgrades and machine learning in live streaming? Additionally, how do you anticipate the macro environment will influence advertising growth in the second half?" James Mitchell replied, "Our second quarter performance was strong, with double-digit growth in all ad categories except automotive. We had an easy base month for advertising in April due to the lockdowns last year. Growth remained fast but not as fast in May, June, and July. Looking ahead, domestic consumption trends may impact advertising, but it's important to note that our growth in Q2 was 34% despite weak domestic consumption. We have our own drivers, such as ad tech enhancements and video account monetization. If domestic consumption weakens later in the year, advertisers would likely pull back from lower ROI inventories first. Our ad tech platform enhancements have improved ROI, so any weakness would likely affect us later than others. Overall, we are aware of macro risks but optimistic about outgrowing the industry throughout the year." Goldman Sachs analyst Ronald Kung inquired, "Can you provide more information on our plans for generative AI and its potential applications within our Tencent ecosystem? Additionally, can you discuss any potential monetization opportunities from the usage of generative AI?" Martin Lau replied, "Generative AI is a key focus for us, and we see its potential beyond just chatbots. It can enhance efficiency and improve user services, ad targeting, data targeting, and content production. We are making progress in building our own foundation model, which is performing well in internal testing. We are also providing a marketplace for enterprises to customize open-source models for their own use. Our products, like Tencent Meeting, are already deploying AI tools to enhance efficiency and productivity. Overall, generative AI is a positive driver for our business." Credit Suisse analyst Kenneth Fong inquired, regarding the longevity and growth potential of our existing game titles, considering the low monetization level of our legacy games. Additionally, I would like to understand the sustainability of the VAS GP margin going forward. James Mitchell replied, "The improvement in value-added service business gross margin is due to positive mix shifts, including the rapid increase in mini-game activity. Mini-games are booked on a net revenue basis, resulting in higher gross profit compared to traditional games. Additionally, the reduction in low-margin live streaming entertainment revenue at Tencent Music and Ouya has contributed to the higher margin. These structural shifts towards higher-margin revenue streams are sustainable." Regarding the flat domestic game revenue in the second quarter, it was not due to a lack of new titles. We did launch some PC game titles, and even if we had launched more mobile game titles, their revenue contribution would have been realized later in the year. The primary factor was our decision to temporarily release less commercially impactful content. However, in the third quarter, we have resumed releasing commercially impactful content. Our evergreen games, such as League of Legends and Honor of Kings, have demonstrated longevity and continue to be healthy in terms of users and monetization. We have years of experience operating evergreen games and have observed a significant difference in retention compared to content-driven games. In some cases, net churn is negative, meaning more returning or lapsed users are coming back to the game due to new content. We alternate between heavier and lighter commercialization quarters for these games. Our goal is to achieve the same enduring popularity with new evergreen games like Fight of the Golden Spatula, Arena Breakout, and Wild Rift. Martin Lau replied, "Our game revenue does not fully capture the growth in our game franchise due to the rapid expansion of our presence in the casual games segment through our mini-games platform. Our mini-games platform is now the largest in China, surpassing any other casual game platform in terms of user base and gross receipts. However, the financial benefit from this growth is not reflected in our game revenue. Instead, it appears as a commission in our VAS, value-added services, revenue. This is an important development and growth in our casual games segment that is not accounted for in our game revenue. Credit Suisse analyst Kenneth Fong inquired, "My question is regarding the advertising initiatives. Can you provide more information on the operational opportunities that we can leverage to drive growth and continue to outperform our peers in the near term?" James Mitchell replied, "We see both short-term and long-term opportunities in our video accounts. Our ad load is currently much lower than our peers, so increasing it will lead to more revenue. Additionally, our peers generate a significant portion of their advertising revenue from native advertisers within their video services. By growing e-commerce within our video accounts and leveraging our existing infrastructure, we can double our advertising revenue. The time spent on our video accounts has also nearly doubled year-on-year, providing a strong foundation for advertising revenue growth. In terms of advertising technology, we are continuously investing in CPU and GPU-driven machine learning infrastructure to enhance our ad targeting. We are also working on updating our neural network models more frequently, moving towards real-time updates. We still have room to improve compared to our Western counterparts, but we believe our diverse inventory and unique data give us a competitive advantage. Furthermore, we have new advertising opportunities, such as the search inventory within Wixen. Despite the uncertain overall economy, we have been able to grow consistently by delivering a strong return on investment to advertisers. We are confident that we will continue to grow as we further enhance advertiser ROI and attract more spending. Citi analyst Alicia Yap inquired, "My question is regarding the Tencent cloud model as a service solution. Can management clarify if this solution is primarily targeted towards larger enterprises and data-intensive industries? Additionally, apart from tourism and public service, what other industry verticals does the company plan to enter with this solution? Will medium-sized and smaller enterprises also be able to benefit from and utilize this service? Lastly, does the model as a service solution generate higher recurring revenues and margins compared to the company's existing business service offerings?" James Mitchell replied, "Yes, we believe that the AI and model as a service solution will benefit various industries, particularly larger companies initially. In addition to tourism and public services, we see potential in verticals such as financial institutions, retail enterprises, especially larger ones, industrial companies, and even some mid-size internet companies. These companies have valuable data and user engagement, enabling them to train their models and enhance customer interactions. As the industry matures, medium-sized and smaller enterprises may also benefit, primarily by using pre-trained models through APIs rather than training their own. Regarding the business model, the revenue model is still evolving. However, in theory, the high margin and high recurring revenue potential holds true because we are adding significant value to our customers. Once customers integrate these services into their customer interactions, the stickiness of the solution increases compared to back-end systems." Martin Lau replied, "Our ad platform has undergone significant changes, particularly in the area of machine learning. We face challenges due to the variety of platforms, inventories, and user base we have. To address this, we transitioned from using CPUs to GPUs and developed a large neural network to handle the complexities involved. This has resulted in more effective and faster ad targeting, leading to higher accuracy and improved ROI. We are still in the early stages of this deployment and will continue to enhance our technology to further optimize our ad systems." AllianceBernstein analyst Robin Ju inquired, "Could you provide an update on the upcoming launch slates for new games and share what specifically excites you about them? Additionally, how is the progress of AAA game development since the company's pivot a few years ago? On the topic of mini-games, why is there a lack of financial disclosure regarding its performance? Considering the previous disclosure of smartphone games, are there any plans to reintroduce financial reporting for mini-games? Shifting to e-commerce, can management provide insights on the current size and growth of total e-commerce across WeChat, particularly the contribution of live streaming? Are there any plans or targets in place to achieve peer levels of scale in the e-commerce segment?" James Mitchell replied, "We have a strong lineup of upcoming game releases, both domestically and internationally. Some notable titles include the High Ability Heroes game, an Honor of Kings tie-in, and a Need for Speed game. Internationally, Riot's new fighting game and grinding gear games Path of Exile 2 have received positive reception. Additionally, we have several games being developed in China for global distribution. We appreciate your counsel on ongoing mini-game disclosures and will take it into consideration." Martin Lau replied, "Our e-commerce activities have been thriving even before the introduction of video accounts and live streaming. Our mini programs alone have generated trillions of annualized GMV, with a significant portion coming from physical product e-commerce, surpassing 1 trillion Chinese yuan in annualized GMV. Live streaming, on the other hand, is a newer revenue source and has shown promising growth, currently operating at a tens of billions RMB annualized run rate. This signifies that we are still in the early stages of development in this area. The key distinction here is that these e-commerce revenues allow us to charge a take rate, benefiting both us and our merchants by helping them acquire new customers. While many programs primarily focus on serving existing customers and driving repeat purchases, live streaming e-commerce enables merchants to tap into a new customer base by leveraging our platform to market their products and services. This dynamic complements our mini-program e-commerce activities and adds value to our overall ecosystem. Moreover, live streaming e-commerce has the potential to generate more revenue for us through commissionary revenue and increased advertising within video accounts. Merchants are willing to invest in advertising to attract new customers to their live streaming sessions, further enhancing our revenue streams. Exane BNP Paribas analyst William Packer inquired, "Could you please provide an update on recent domestic regulatory developments in gaming, short-form video, and fintech? Additionally, could you discuss the potential impact of the proposed new rules by the Cyberspace Administration of China on your business, specifically in relation to minors? Can you also provide an estimate of the revenue exposure to individuals aged 18 and below, excluding video games?" Martin Lau replied, "In terms of industry regulation, we are seeing a trend towards normalization, which is being supported by various new developments. The top leadership has emphasized the importance of the private sector and platform economy, promoting healthy and sustainable development. Financial regulators have concluded disciplinary actions in the fintech sector and are now focused on normalized regulation and supporting financial inclusion efforts. The NDRC has recognized internet platforms' investments in startups, particularly mentioning Tencent. The game sector is also experiencing normalized issuance. Overall, we are seeing a more supportive regulatory environment across all our business segments. Regarding the CAC consultation paper on minors' protection, we fully support and embrace the policy. We have already implemented mandatory protection measures in our games, which are more stringent than the proposed consultation. Our time spent limit for teenage mode is 40 minutes per day, at the lower end of the proposed range. We do not expect a material impact on our business as minimal revenue is generated from minors. We remain committed to minor protection, full compliance, and constructive collaboration with regulatory authorities. HSBC analyst Charlene Liu inquired, "How should we expect profit growth to trend in the second half of this year and in 2024, considering the potential for further monetization of video accounts and the potential recovery of domestic games growth? Can we anticipate these factors contributing to stronger profit growth compared to top-line growth?" James Mitchell replied, "We are seeing three key factors driving our margin growth. Firstly, the shift towards higher margin revenue, particularly in our video accounts, is contributing to our overall profitability. Secondly, the deployment of ad tech has allowed us to monetize previously unsold inventory, resulting in a high incremental margin business. Additionally, the competitive bidding for this inventory has led to higher prices and increased margins. In our mini-game segment, although we only report a minority percentage of the GMV revenue, the flow-through to reported revenue is higher margin compared to our mainstream game business. The e-commerce fees associated with our mini-program and video account infrastructure also contribute to this higher margin. We have also made the strategic decision to scale back certain lower-margin revenue streams, such as resale businesses within our cloud division and live streaming entertainment at Tencent Music and Ouya. HSBC analyst Charlene Liu inquired, "Can you provide an update on the contribution of mini-games to social network revenue and mini-games ads to ad revenue? Additionally, how should we consider the synergies and competition between mini-games and our online game business?" James Mitchell replied, "In China, we see three main categories of games: competitive esports games, story-driven games, and casual games. We have a strong position in the competitive esports market with top games like Wild Rift, Arena Breakout, and Fight of the Golden Spatula. These games have long-term potential and will generate cash flow for decades. Story-driven games have historically been a weaker area for us, but we are developing big narrative-driven content-rich games to participate in the renaissance of this category. It's a greenfield opportunity for us with significant upside. In the casual games category, we believe the platform model is the right approach. Platforms like Roblox have shown significant growth in terms of users and revenue. Our platform is over 5 times bigger than any single app-based casual game and is growing rapidly as new casual game experiences appear. As for cannibalization, we see 3 buckets of users: those who play app and client-based games, those who only play mini-games, and those who do both. We don't see any evidence of cannibalization because even for those who do both, they generally play different types of games at different times. The mini-game platform is largely incremental and gets us into the emerging casual game opportunity in the best way possible, as a Roblox-like platform rather than a standalone app." John Lowe replied, "Both social networks and online advertising, each accounting for a single-digit percentage." Haitong International Securities analyst Natalie Wu inquired, "Given the recent normalization of domestic game license approvals, has competition increased and market share become more dispersed? Additionally, considering the weak macro trends in China, which of our business lines are most vulnerable and which are most resilient? What measures have been taken or are planned to address these macro headwinds? James Mitchell replied, in terms of the competitive environment for games, we see three broad categories. Firstly, the competitive esports games where we already have a strong presence and are doubling down on with the success of our new esports games. Secondly, the content or narrative-driven games where competition has intensified, but historically we generate very little revenue in that category. However, we are looking forward to entering it more actively in the future. And thirdly, the casual games category where there are industry peers seeking to compete with us, but we are confident in our platform approach. Regarding sensitivity to the macro environment, let's touch briefly on advertising, fintech, and games. In the game business, while our domestic game revenue was not the best in the last quarter, it was unrelated to the macro environment. In fact, in challenging macro environments, consumers tend to shift to lower-priced experiences, which is positive for the game industry. We believe the game business, both in China and globally, has historically not been economically cyclical and we don't expect it to become so now. In the advertising business, it could be economically cyclical, but it is more directly sensitive to consumption spending rather than net exports or property prices. Consumption spending has been recovering gradually, and we believe that regardless of the macro environment, we will outperform due to our early-stage monetization of video accounts, deployment of ad tech, and ability to deliver high ROIs. As for the fintech business, particularly commercial payments, it does reflect economic activity, especially consumer activity, in real time. This is the area where macro variables have the most direct impact on our revenue fluctuations on a month-to-month basis. However, we have other services within fintech beyond commercial payments and we are looking forward to extending and launching new services in this supportive regulatory environment. Martin Lau replied, we are excited about the issuance of bond EOS as it drives innovation in the gaming industry, which is crucial for market growth. Our ability to bring new titles to the market benefits from the overall expansion of the gaming market. Additionally, our mini-games platform benefits from the increasing innovation in the market. Regarding consumption, we have seen recovery from the COVID period, although it may not be as fast as expected. However, government leaders are focused on economic development and supporting growth, and they are implementing policies and measures to drive economic growth. We also believe in the resilience and entrepreneurship within the Chinese economy. While we are waiting for a faster recovery, we have already achieved strong revenue and profit growth due to our high-quality revenue streams and disciplined approach. Overall, we feel confident about our positioning. Jefferies analyst Thomas Chong inquired, can management comment on the take rate trend in the fintech side and provide insights on the priorities for new businesses in segments like online credit, wealth management, and insurance? Martin Lau replied, our take rate is expected to remain stable. However, we have identified several value-added services that we can offer to merchants, allowing us to charge additional fees for the added value. Additionally, with the regulatory support for the healthy growth of the fintech industry, we anticipate more opportunities in financial products. Thank you for joining our results webinar. For more information, please visit our company website at www.tencent.com.